What a lot of people experience is buying a home like they're in a rowboat with one oar in a storm. What we want to do is get you set up on a cruise liner heading through smooth seas. So what we're going to focus on in this video is informing and educating you with information so that whether you buy a house today on day one or 365 days from now, you're in a position to be able to buy a house. Step one, pre-qualification. The common misconception is that this conversation leads to being approved or denied of a loan. This really is just a conversation over coffee about what's brought you to have a conversation with a loan officer to get ready to buy a home. Through this, you do discuss your fundamental stuff like how long you've been doing the work that you're doing, whether you love it, whether you'll continue doing it, how much it's paying you, whether that's enough for you to afford your current lifestyle. You talk through whether you're renting, whether you've owned in the past, whether you are just living with your parents rent-free. All of these things play into what it's going to look like when you get ready to buy the house. So we've already talked through your work history and your income. We could talk about whether you're paying your bills, which is going to give a good indication of your credit, and then also looking at what products are available for someone who has suboptimal credit or credit below 700, or somebody who has excellent credit up into the 700. There are loan products for everyone with all different types of credit, and whether you are buying a house today or you're buying a house 2 years from now, you at least have a roadmap so that you can see what it looks like to buy a home with your credit where it stands. All right, so then you are obviously asking yourself, how do I get pre-qualified? There are tons of different ways to do the same thing, which is complete a uniform residential loan application. The 1003, it's a standard document that's used to submit your loan application to underwriting. By working with me, clicking the link below, you can have a super seamless process all the way through getting you to the closing table. Moving into step two, the pre-approval process. We've gotten an idea of what initial documents we need. You get me your documents of your income, your asset documents. We do a soft credit pull. We obviously don't want to have a hard inquiry as you're going into the buying process. Once you are under contract, we'll do that hard inquiry that we submit your loan into underwriting for. But for the pre-approval process, we'll get your income, asset, and any other documents that we would need for that initial approval. So if you are trying to time the market and wait until rates come down or anything starts to fall in place with your life, if you were to prepare for that now, when we come into the next seasonal shift, you might not be able to find yourself competing to be able to get into a home. So that's why it's so important to get pre-qualified and approved and comfortable and confident as you are getting ready to buy a home, because at whatever point that home that you feel aligns with all of your needs, your dreams, whether it's the number of bedrooms, the neighborhood, the kitchen, the bathroom, whatever, it doesn't matter. If you're in a position where all of a sudden you see a house and there's anything on your profile to be credit worthy that hasn't been already identified, you're gonna miss out, and then you're gonna fall right back into that same cycle that everybody always falls into. Dang, I wish I would have gotten pre-qualified sooner. So let's just talk about where we're at today on August 14th of 2024. We've already seen rates come down. Looking at the official rate decrease that's coming in the middle of next month, with the producer inflation coming back lighter than anticipated from July, it caused interest rates to go down. And that happens every single month as we're waiting for the official federal funds rate to be determined by the Fed when they meet. And then if you look at historical interest rate data from in the 70s, when we went through our last major inflationary period, through to the 80s when we saw the spike in interest rates, through the 90s, 2000s, and then from what we've now seen on historically low interest rates. So our high interest rate environment actually lines up with what the average interest rate is over the last 50 years. So then when we're going into a declining rate environment, which in March of 2022, that was when the first rate increase went into effect, and then June of 2022, and at which point there were 11 rate increases that brought us to today, where now we are going to see 3 to 4 rate decreases over the next 18 months. So let's talk about what that does to affordability. If we want to time the market and we're either thinking about purchasing a home or refinancing to pull cash out to pay off debt, either one, you'd want to be on the front end of rates going down, because then as rates do reduce, you can refinance every 6 months until you get that payment right where you want it. There is a misconception of rates that there's like this fishbowl of interest rates that float around and everybody has access to, but it really comes down to the way that you've prepared to buy a home, whether you've identified a home within a specific area, you're at a certain income limit. All of these things affect what what type of interest rate you get. I worked with 2 people in the same exact month, first-time home buyers, one W-2 full-time employee buying a home in Phoenix, and another self-employed buying a townhouse in Scottsdale. One got a 6.99% interest rate, the other one an 8.5% interest rate, just because of the differences in the way that they set up to buy a house. The next you want to focus on after you're pre-qualified, pre-approved, all comfy and confident getting out there to buy a home is your buyer-broker agreement. Now, the buyer-broker agreement is something that is changing in a drastic way August 17th nationally, but it's already rolled out August 1st here in Arizona. So if you're watching this video, these laws have already probably gone into effect. So as a part of your pre-approval process, we're actually going to receive a copy of your buyer-broker agreement so that we can disclose those updated fees to you so there aren't any surprises at closing. So I have a recently pre-approved client. We will call them Client A, going in, looking at a home, and then there's Client B, competitive offer situation, $400,000 purchase price, full price offer. The difference between Client A, my client getting their offer accepted, and Client B was the 1% agent commission that Client B's realtor was unwilling to give up. The importance of this fact of Client A getting the home is that you truly want to understand your realtor, because Client B had absolutely no idea that their realtor representing them was unwilling to reduce their commission for them to get the home. So as you're having conversations beyond just the buyer-broker agreement, make sure that your situation and your core goals are understood by your realtor partner so that you don't end up in the same situation. All right, so now what we're gonna do is the cool and fun part that everyone loves. Get out, look at houses, see different features and benefits of homes, and then what the mechanics of an amazing offer actually look like. Let's go check it out. So hopefully now you've gained a little bit of insight and perspective on the difference between being on that cruise liner on smooth seas versus an uninformed buyer who's sitting on that sailboat with one oar in the eye of the storm. If you have enjoyed this content and want more in the future, please do like, connect, subscribe, whatever it is that you do on the platform for us to be able to provide you with information moving forward. I'm excited to do so, and I look forward to hearing from you.